Hey everybody, welcome back to another episode of The Agent's Edge. My name is Ryan Polimeni. Today we're going to talk about how to uncover money to find for IULs. Now, this is an interesting topic that I get a lot of questions on because indexed universal life insurance is something that could really help your clients create a tax-free retirement. Now, this method could also be used for finding big whole life cases, big IULs, really to find something more than just like your mortgage protection and final expense sale. And there's a few ways that you can find money without making your clients spend any more than they're already spending. And I think this is the really big part of why my average life case is $3,400 in annual premium. Because I'm able to find money but not make my clients spend any more than they're already spending. It comes down to how do you show them how to reallocate dollars to something that's going to help them a lot more versus where they already are. Let me give you an example of what I mean. This is where having an understanding of taxes play a role, because we all hear this is tax-free retirement, but do you truly understand why it's tax-free retirement? There are really only three ways to create a tax-free retirement for our client. Number one is a Roth IRA. We've all heard Roth IRA. You're limited though. You're limited to how much you can put in. You're also limited in income. So if you make too much money, you can't even participate in a Roth. So that's one way. City-owned municipal bonds is another way, but if you live cross borders and you buy municipal bonds in another state, that can no longer be a tax-free. So again, I'm not going to dive too deep into that because it's different state to state. But if you live in a state and you buy muni bonds, you sell them, that could be tax-free. The third way is actually using life insurance. IULs and whole life insurance give your client an opportunity to take monies out as a loan, and that's tax-free. Okay? I'm not going to focus, it's not a product training session. I'm not going to go in the ins and outs of all this stuff. I want to share with you how to find money to fund these things. And I'm going to give you a few tips. There's a lot more that I could go over, but I'm just going to give you a few today because I really want you to start grasping this concept of not having your clients spend more money than they're already spending. So where can you look for money? Number one, are they already participating in other life insurance policies? Maybe they have a couple other term life insurance. Maybe they have a whole life insurance that they've been paying on since they were 20 years old and not really doing a whole lot. They're putting $30, $40 a month into it. Well, you could share with them how to consolidate life insurance policies. So a lot of times, when I'm selling an insurance policy, if they have a term policy, they're 40 years old, they've had the term since they were 30, and it's a 20-year term, right? They got about 10 years left on that before it runs out. So one of the things that's important is understanding that an indexed universal life insurance is a permanent plan. So you can help them consolidate different terms. Maybe they have other forms of like a UL that's maybe not performing very well. They have a whole life insurance that they're getting a very low fixed interest rate on. The thing too that you have to understand when you're figuring out how to set up an IUL is making sure that's set up properly. And I got to tell you, I have worked with so many clients that have IULs or ULs that were never set up properly, and they will either need to fund more later on to keep up with the policy from not lapsing, right? Or it's just not performing at where they want it to perform at. So understanding how to read these type of life insurance policies, especially ones that are in force, will allow you to pick them apart if it's not the right thing. If it's the right thing, leave it alone. But if it's not set up properly or it's not performing at what they were promised, right? Because this is part of the problem too, is people promise these 8, 9, 10% interest rates, which are absolute ridiculous because you'll get them some years, but just not the average. So you have to be realistic. And people have unrealistic expectations. They're getting mad about it. So find money by finding them in other policies. Look, maybe they're paying $50 for a term policy, and they're paying another $50 for a UL. Okay, well, that's $100 right there that they're already spending that can be reallocated to something maybe that puts them in a better position. The other thing I like to do is talk to them about their tax situation when it comes to their retirement plans. Why? Because the majority of people are not participating either because they don't have the option to or because they don't even know anything about it in the Roth 401k. So what I'd like to do is try to find out what they're getting matched at work. Example, if they make $100,000 a year and they're getting matched the first 5%, right? They're putting in $5,000, their employer is matching them $5,000. If they're doing all that and putting it into the traditional, that means that when it comes out later on, it's going to be fully taxable. So what I want to do is share with my clients how to change the dynamics of that and have that become a tax-free retirement. So I like people getting their match. Don't get me wrong. I'm not going to tell somebody to not get their free money. What I look for is people who are overfunding their 401ks, TSPs, 403, whatever their retirement plan is. Because think about this. If you can find that someone's putting $1,000 a month into their 401k, or let's use an easier number. Let's say they're putting in 800, okay? And they're only getting matched on the first 400. What you just found is an opportunity to show someone how to take that additional 400 that they're overfunding on their 401k and reallocate those funds to an index universal life insurance policy that's going to do a few things. Number one, it's going to give them more control of their money. Why? Because a 401k, they don't have access to that money until they're 59 and a half, for the most part. Obviously stipulations to that, but in general, 59 and a half rule applies, right? Unless they take out a loan from there, which sometimes they don't want to do that. So that's a problem. That also comes to the problem of liquidity. And I like talk about liquidity with my clients because all right, look, you're going to lock up all this money to 59 and a half. What if you needed it? Wouldn't you want to have more control of that? So not only can we do something on the outside, you'll have more control over. You could take loans from it as needed. There's no income limit. I work with a lot of doctors, and I work with a lot of people who are very high-paid engineers. And what I find is that the majority of them, they can't even participate in the Roth. So this is a phenomenal opportunity for you to say, look, you're putting, and these people are mostly maxing out their 401ks, they're putting in $1,000 a month. They can't participate in a Roth. What do they do for tax-free retirement? Well, let's teach them how to reallocate some of that money into a vehicle like an IUL that they're spending the same money. Remember, I haven't asked one person to spend a dime yet. I'm just teaching them how to reallocate dollars. So again, this is why you have to know the tax stuff too and how this works. So you've got additional funds that they're already paying into life insurance. You can use that, consolidate that, put them into a better position where they have a permanent plan and they're building cash value at a higher rate potentially because of the internal indexes. You have the ability to show them how to reallocate money that's going to their 401ks into the IUL product. Lastly, again, this comes down to knowing the tax part of the income limits. Let's say you do meet somebody that is, a $200,000-$300,000 income earner, and they want to participate in Roth but just can't, and they're sticking money into a brokerage account. Well, let's say that they're putting in $500 a month into a brokerage account. They're going to end up paying capital gains tax on that. So what if you show them how to reallocate that money into an IUL? It's $500. That's a $6,000 a year annual premium that's going into an IUL that's providing them with a tax-free retirement that they could pull from, have access to liquidity-wise. They don't have to sell their shares and pay capital gains tax in order to get the money and liquidity out of there. So again, some of you are really overcomplicating this. And my advice to you is to stop, is to understand how an IUL and big whole life cases works. Again, this could be we could have the same argument for whole life. But my point is to really spend time fact-finding. Know where the money is going to. We call it following the dollars. If you can follow the dollar trail, you would be amazed at how much money you find that's excess or how to reallocate people's dollars properly. Now, again, there are a lot of other methods that we use in our firm and that I use to find these cases. Again, my average life case is $3,600 in annual premium. Think about that for a second. A lot of you, if you're out there selling mortgage protection final expense, your average life case is $700 to $1,000. What if I could teach you how to triple that? You see, that's what I do. Very rarely do I write a case that's even less than $2,000 annual premium, all because I'm finding money. So again, simplify the process. Do a better job of fact-finding and following the dollars, because once you do, this becomes a lot easier, and your clients will like you a lot more if you can just reallocate money versus asking them for more money. See, what's a better scenario? What's a better scenario for you, right? Showing them how to reallocate is going to win all the time. Now, there's not always an opportunity to do that. Sometimes you do have to ask for money, but the point that I'm trying to make is make it easy. Do a better job fact finding. Do a better job following the dollars. Look, this is stuff that I talk a lot about in my coaching program, in my Level Up Advisors Academy, all the things that I want to help you become a top level producer. It starts with simplifying things for you. Stop overcomplicating it. Don't try to go in there and try to ask somebody for $500 a month that they're not even putting $500 a month in anything. Find the money, reallocate it, put them in a better position, show them the benefits. Listen, I hope this has been helpful for you. We've got a lot more to talk about in the IULs. If you have not had an opportunity yet to check out my coaching program, we're doing it live. We've got a lot of content coming down. A lot of people signed up that are ready to learn and take their business to the next level. If you want to double your business this year and next year and the following year, become a part of the program. Love to have you. If you like this, hit the like button. Comment below if this has been helpful for you. Don't forget to subscribe. Hey, do me a favor. Share this with some people that this could help as well. We'll see you on the next show. If you've ever wanted to learn how to write over $5 million a year in annuity volume, Level Up Advisors Academy was built for you. In this academy, we talk about things like how to do massive annuity production, assets under management, big whole life and IUL cases. Look, 5 years ago, before I built this product, I didn't even know how to spell the word annuity, but a simple system that I learned allowed me to write over $5 million a year in annuity production and now over $10 million a year. I took what I know, the system that I've built, and I put it into Level Up Advisors Academy for you to be able to have access to it 24/7 on demand. If you've ever wanted to take your business to the next level, this academy was built for you. Click the link below to get access today. Look forward to working with you in the future.